We touched on before when we were talking before we started this around intergenerational wealth transfer,
Yes.
and we're about to embark on over the next 2 decades the largest inheritance of money coming down a generation that we've seen for a very very long time, if ever.
Yes.
What sort of protections should people be thinking about if them or their parents are about to start making gifts to the next gen,
Yeah.
or looking at some of those inheritance tax planning elements?
Yeah, that's a really good point because life insurance is a great part of intergenerational wealth planning, and I don't think it's probably talked about enough. I think it is one of those parts of the financial plan that is sometimes missed off.
Yeah.
So when making a gift, you're making obviously a lifetime gift where you have an inheritance tax liability then, and you have that liability for 7 years.
Yeah.
And as you know, like initially you owed a 40% and then it
Yeah.
comes down year on year until you get to year 7 and then you're
Yeah.
free.
Yeah.
But you can insure that risk with a life insurance policy. So we would say take the life insurance. It's called a gift into vivos plan.
Yeah.
And what it does is it replicates the reduction in the inheritance tax for the 7 years. So it is what we call in effect a decrease in life insurance policy,
Yeah.
but it is set up specifically to cover that cost. And then we would write that into trust.
Yeah.
So by writing into trust, what we're doing is saying, okay, this life insurance policy is to pass to the children.
Yeah.
We would want to remove that from the estate. So what the trust does is put it in a wrapper, basically, which makes sure that it doesn't hit the estate and then cause more problems.
Yeah.
And also it goes to the right people. So it
Yeah.
goes to the children, and it also pays out quickly because the insurer just needs to have the death certificate. It takes a number of weeks
Yeah.
for the family then to be able to satisfy
distribute the
that
assets.
inheritance tax liability. Yeah.
So if you're thinking about starting a family or have a young family, what sort of protection policies would you advise those individuals start considering?
Okay, yeah, that's a great point because I think when you're thinking about starting a family or you've started a family, your priorities really do change.
Yeah.
And I think you realise the responsibility that you now have,
Yeah.
which is your children,
Yeah.
and to make sure that they are well looked after. And I think one of the concerns then is what would happen if my children got sick, or my child got sick?
Yeah.
How would I be able to continue to care for them and continue to earn an income and support the family? And that is a huge concern. But there is insurance out there which can help you protect that.
Yeah.
So there's a type of insurance called children's critical illness cover, which is similar to adults' critical illness cover in the sense that it pays a lump sum, a tax-free lump sum,
Yeah.
and it's paid out on diagnosis of a serious illness.
Okay.
So what that would mean in real terms is that you're able to take some time off work, you're able to, pay your mortgage, pay the bills, you're able to, pay for all of the, travel and any sort of, additional
Time.
costs that may incur. And this has become much more widely talked about, I think now, because children's critical illness has been more innovated, I think, recently. So you've seen insurers thinking, okay, this is a really important point because it's actually a top 5 claim with all insurers, which is really hard to talk about, but is an important, therefore, topic because it is a type,
it's happening.
exactly that. You know that people are having claims, and I've dealt with children's critical illness claims, so it is something that we do see and we do deal with. But it means that at that point, that parent can have that lump sum, and so what we're talking about more now is how much of a lump sum would you think is important, because in the old policies it was a percentage of your own cover,
Right.
and it was very much linked to the parents' benefits.
Yeah.
Now what we've seen is them remove it from the parents' benefits more and make it a separate type of insurance.
Okay.
So we can talk more about how much insurance would you like now? You know, if you had to take a year off with your child, how much would you need? Because you can have from between 10 and £100,000 worth of children's critical illness cover. And you can now link it to more than just a critical illness plan for adults. You can now link it if you're taking out life insurance. Some insurers will allow you to do that. And if you're taking out income protection, some insurers will allow you to do that. So there was a recent study from The Guardian, who are an insurer in the UK market, that was taken with Click Sargent, which are a children's cancer charity. And they were looking at how likely there would be a need for children's critical illness. So in this study, it showed that 4,500 under 25s suffered cancer in a year.
Wow.
Yeah, so it's 12 families a day, which is a lot of families that have been affected. And from this study, it also showed that 42% of parents had to take some time off work in order to look after their sick child. And that 19% of those parents had to take up to a year as unpaid leave. So it makes you realise the financial impact of a sick child. And the real value of having
that level of protection.
The children's critical illness cover, which is, by looking at these kind of studies, you can see is just so important.
And at what sort of price, you know, how much is a children's critical illness cover, and what level can you access it at?
So you can access it from just a couple of pounds a month. So, you know, if you're looking at less cover, you could be paying literally £2 to maybe £10 a month, as dependent on the amount of children's critical illness you want to add into the policy. But it's not 20, 30, £40, you know, it's like £2 to £10. So it's
super manageable and affordable.
Super affordable. And if you've got two parents, you can have two separate policies. So if you were both, for example, taking your own critical illness plan out, you can add children's critical illness onto both. And if your child was sick, you would be able to claim on both policies. So you would get,
really, you know, helpful
double
to understand. And another question that we often get asked is whether you can have an income protection policy to help pay for maternity costs when you're off work. Is that something that people can take out?
Unfortunately not. It's because maternity, your maternity pay is part of an income. So it's a reduced income, but you are able to claim an income. You are on maternity leave. So as such, it is covered by, you would be covered by your maternity pay from, you know, from your employer. The alternative to that, you know, if you're off sick past your maternity pay, then that could be a possibility.
Okay, and then in terms of, you know, if a single parents, what sort of cover would you be recommending that they take out or consider in a higher priority?
I think if you're a working parent, then income protection is always the top priority. So that's the insurance which covers your income in case you're sick or can't work due to a disability. Because if you're a single income family and you become sick, or you're involved in an accident and you can't work, then that's the income for the household. So what income protection would allow you to do is say, okay, I want to protect up to 60% of my salary and make sure that if I'm sick, that money is going to be paid to me each month until I can return to work.
Brilliant, perfect. Thank you so much
You're welcome.
for sharing your insights today. It's been great to have you. Thank you.
Thank you.